Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. A bearish long black Marubozu yesterday after the previous session's bullish engulfing pattern. An interesting move down after events over the weekend. An open right on the green short medium moving average, which is currently 117.71. Then filling the weekend gap before dropping down through the dark blue lower trend line, currently 117.17 of the descending wedge pattern, sealing the breach above it, to be halted for a while, I suppose unsurprisingly, by the combination of the mauve medium moving average, currently at 116.98, and the October 21 high at 116.92. However, prices pushed lower and reached the gold long moving average below, currently at 116.71, where they halted finally, finishing in between there and the mauve medium moving average overhead. This is now a first close below the late January to date descending wedge pattern, which is currently 117.14 to 117.61, and it is enough of a close start talking about targets below. Thus, a primary target X is not very far below, down in the 116.12 zone, with a secondary much harder to reach target X1 down in the 113.56 zone. Additionally, this revives the very lopsided double top idea I'd had floated over recent weeks. Hence, a primary target for this was down in the 116.76 zone, with a secondary hard to reach target X2 down in the 116.01 zone. Now, the primary target has already been achieved for this, and the secondary target is not too far lower either. You will note I have used the lower February high as my measuring point rather than the much higher late January high. This is because of my conservative nature in such things, and I'm happy to stick with that. In the bigger picture, the market remains within the mid-2025 based bright red shallow bull channel, currently 116.21 to 120.99. This pattern continues to be the main showrunner for this market. As so far today, a move up over the October 21 high and just over the dark blue broken lower trend line of the descending wedge pattern, but then back down through the gold long moving average. We actually didn't really reach that dark blue one. We sort of just stopped short of it at the medium moving average. At the medium moving average, and then back down through the gold long moving average, and now through the bright red lower bull channel line. Below this, we have the November 2020 low at 116.02 and the 2019 high at 115.70, as well as the January this year low at the same level. We have reached target X at 116.12 and target X2 at 116.01. Cable, aka sterling against the US dollar. A combined bearish opening black Marubozu and bearish engulfing pattern yesterday, if only just on the latter, after the previous session's indecisive spinning top pattern. An interesting move down after events over the weekend. Prices opened at where they closed on Friday at the September 2020 high at 134.83, and then dropped down through the gold long moving average, currently 134.43, and the 2024 high at 134.34, as well as the mauve medium moving average, currently 133.97, and even the bright red lower trend line of the descending wedge pattern, which is currently 133.57, to finally halt, somewhat surprisingly, at the purple highlighted extension to the neckline of the small April to May 2025 head and shoulders continuation pattern. That's at 133.16. Now, I suppose in hindsight I should not be that surprised that this held up prices as it had done in October and sort of did in July both last year. And along with the nearby bright green neckline, currently at 132.99 for the August to October 2025 head and shoulders top, and the March 22 high at 132.98 for January this year. So altogether, a significant new dynamic band, which is 132.98 to 133.16. From this base, prices have pulled back up, back within the bright red descending wedge pattern, closing just over the mauve medium moving average. So after all this, the market remained within the new pattern that emerged from a previous pattern. You see, originally I noted a lopsided double top pattern from mid-January to late February. The key level was the low 4 weeks ago at 135.06. We closed below that level late 2 weeks ago and again early last week, but there had been some big obstacles on the way lower. Most of these have now been dealt with by this big move down. I had previously set out targets below for the double top pattern of a primary target X down in the 134.17 zone, with a secondary hard to reach target X1 down in the 133 even zone. Target X was reached yesterday and we came awfully close yesterday to reaching the secondary target X1. The new pattern that emerged is a bright red mid-January to date descending wedge pattern, currently 133.57 to 134.94. This pattern has now effectively taken over the running of the latest moves. However, prices have not as yet closed below this pattern, so not as yet revealed potentials or targets, not just yet. In the bigger picture, prices maintain their stance within the previously broken and now seemingly repaired, very shallow dark blue bear channel dating between early July and early August last year through to late January this year, and it's currently 129.73 to 136 even. So far today, well, a strong move lower after an early attempt back up towards the 2024 high at 134.34. We are back below the purple neckline extension and we've reached the secondary target X1 at 133 even. Further down is the combined 61.8% Fibonacci line, the June 16 to September 22 move and the August 24 high, both at 132.65. And then the interesting pink neckline extension, currently at 132.37 of the August to October 2025 head and shoulders top. Now we've pierced some of these, but we've pulled back up since then. US dollar against the Japanese yen. A combined bullish engulfing pattern and bullish opening long white Mariposa yesterday after the previous session's indecisive doji cross. A lower open after the events over the weekend based on the broken dark blue upper tine, and that's what the market been basing on, currently at 155.54 of the now broken late January to mid-February bearish shift pitchfork. I actually have today downgraded this pitchfork prior to retiring it completely, but I'll leave it on just so you can see where it based off of. And we had a strong move higher from there through the green short medium moving average, which is currently at 156.06, up through last week's high and towards the key 157.72 level. Now, as I said last week, and I quote, this is potentially an important move higher, end of quote. And the reason why is I've been continuing here the theme of a very lopsided double top seen in sterling against the US dollar and even more lopsided double top in euro against the dollar. And now we might have here a double bottom because of that. Thus, the key level to watch for on any significant move up is over 157.72. Something I asked you all to keep in mind, especially consecutive closes above that. Yesterday's prices reached up over 157.72 but did not stabilize over it, choosing instead to close a little lower. Closes, and that's the plural, closes over this 157.72 level would set up the opportunity for a possible double bottom pattern. Now in the bigger picture, we still remain within the previously breached but seemingly repaired bright red April to November 2025 bull channel, currently 151.74 to 158.56. However, I also drew last week a new, slightly steeper, September and November 2025 to date, bright green bull channel, currently 153.07 to 160.76. And I continue to wonder if this will take over the bullish incentive. Now, so far today, not that much in relative terms, either side of yesterday's close, but now a move up over the high of yesterday and over early February's high. The market has an appetite, it seems, to try up to that important 157.72 level. We're just around it at the moment. Let's see if prices can stabilize over it. US dollar against the CNH, the offshore Chinese yuan. A gapping higher open after the events over the weekend yesterday, since filled in, but still a second bullish white soldier. The market based itself on the old breached upper original bear channel line, currently at 695.98, and moved up through the significant 50% Fibonacci line of February 22 to April 25 move at 686.60, and up to the May 23 low at 689.53, plus the lower trend line, currently 689.93, of the higher, second, broken, shallower bear channel, closing right on the broken lower trend line. Beyond this lower trend line, we have nothing much until the combination of the upper bear trend line, a channel line, currently at 693.55, and the interesting bright red trend line extension, currently at 693.41, to the May to August 2022 ascending triangle. So far today, a drop down to yesterday's open, but then a move back up to the broken shallower lower bear channel line. We're over that at the moment, moving towards yesterday's high. US dollar against the Brazilian real. A combined bullish engulfing pattern and bullish opening white Marobozo yesterday, after the previous session's indecisive spinning top. The market once again utilized as a base the bright red October 2018 to date uptrend, currently 5.13.12, though this time it was with a vengeance, moving up all the way to pierce the dark blue middle time, currently 5.20.03, of the important dark blue mid-December 24 to mid-April 25 bearish shift pitch walk. Prices pierced this, but the market could not stabilize over it, closing a little, if a significant distance, a little underneath it. This long-running bearish shift pitch walk is still the very excellent showrunner here for this market. US dollar against the Mexican peso. A third, if muted when compared to other currencies or markets, a third bullish white soldier yesterday after the previous session's indecisive spinning top. Prices closed up midway within the dark blue November 25 to date base bear channel, which is currently 1699.87 to 1744.94. This is not a too well defined bear channel, but it is still there and has been the showrunner here since late last year. Below, we now have some pretty tough and well tested over January and February supports at the March and April 2016's lows at 1709.23 and 1703.89 respectively. So please bear that in mind on any renewed moves lower. This strong support has put paid to the idea I had of a late January to early February bearish cat's ears pattern, and I have retired it today. Additionally, we are also still within the bright green April to November 2025 bearish shift pitch walk, in between the bright green middle time below, currently at 1693.58, and the overhead bright green upper time, currently at 1749.92. Interestingly, the dark blue upper channel line and the bright green upper time, along with the green descending short medium moving average, which is currently 1753.71, make an interesting and dynamic descending congestion, currently 1744.94 to 1753.71. We also have the July 2017 high overhead at 1743.74 and another small congestion further up between 1756.95 to 1759.58. And that's containing the combined August 2017 and July 2014 lows at 1759.58. So far today, a further move higher through the July 2017 high and over the dark blue upper bear channel line and testing the green upper tine at the bright green upper tine at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.